Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. This is Henry and today is Thursday, July 29. The time is 2 a.m. GMT. So today we're going to be looking at the chart of the S&P 500 E-mini futures ES, and right here we can see 45 minutes chart. We ended with 4 in the intermediate degree here at 42.23, and then since then we have already rally higher again, making all-time high and ending with 1 of 5 here, right? As you can see, we got 1 2 3 4 5 waves ending with 1 of 5, and then now looking for a possible 7 swing in which we finish the first 3 swing here, and then possibly still get to 7 swing here, double zigzag, before turning higher again, right? So if it is doing a double zigzag, then this is the next support area at 43.23, 43.55, which is based on the 100% extension of this WXY. Another alternate here is going to be that instead of doing a 7 swing, we already finished with 2 only as a 3 swing, not as a 7 swing. And then if that's the case, then we won't be doing this, and we're just gonna continue to go up from here. But if you look at the current rally here, it looks so far is only a 3 swing, so that gives us a possibility, right, an opportunity to extend the correction to the downside a little bit into 7 swing into this area before the index resumes the upside again. Okay, so we got both 3 swings on the way down and what looks to be 3 swings on the way up as well, suggesting that I think we have a chance to sort of extend this current pullback into 7 swing. Now if the wave 2 finish here, the rally from here, it would have been an impulse, like it would have been a clear 1 2 3 4 5 like this, but it's not. It is looking corrective as well. So that means I think we are in an extended correction here possibly, and can see another leg lower, in which then this is the next support area with the bullish bias, as shown here with the green right side tagged on the upside. Now so a couple of things here that we can take a look in terms of um, expectation, probability, alternates, and so on. And again, the alternate will be with 2 ending here, one of them, one of the alternates, but I think it's less likely due to the fact the rally looks corrective still. Now second possibility is we have to look at the larger degree. If I look at the week daily, now remember we ended with 4 here, so this is your wave 4 on the daily, so that means this has to be a wave 3, right? And then 1 and 2 will be somewhere along the way. So if you count this 1 2 3 4 5 maybe, then this is probably a 1 and 2 here, right? So that means we're talking about the rally that started from here probably. So we got 1 2 3 4 5 of some kind. So September 25th 2020. So we are within that cycle from September 2020, and now trying to end this wave 5 from here. Now to be honest, there are many different ways to position the label differently. I think there's no question about that. I could have positioned it like this, 3 and 4 like this, and so on, and then suddenly we might be finished here with the wave 5 if I label it this way. And I do see a divergence here which suggests that we could indeed be in some kind of wave 5. I can do with something like this. So there are many, honestly, it's not really going to be difficult to reposition some of the labels here, right? But I think one things that we need to take into consideration, despite the possibility, oh yeah, we might be ending a larger degree and do a bigger pullback and so on, ask yourself the question: we've been going non-stop to new high since 2008. Why would you want to call a major top every single time? Why would you do that, right? When the probability is always going against you, you need to go with the trend. Secondly, take a look at the smaller time frame, right? Take a look at the smaller time frame. and check to see this pullback. If this is a major top of any kind or a larger pullback, I would expect this is going to be doing a 5 waves like this, very strong sell-off, but I didn't see it. All I see is a 3 swing. That is not really what the definition of a bearish market, right? So that means this coupled with the obvious trend to the upside in the larger degree suggests you should always pick the bullish side, right? You should always pick the bullish side. So I see several comment in the previous video on the indices, saying that, oh no, this is this a top, and so you don't need to do that, right? You don't need to call a major top, because the probability is always against you when you trade. Trading is not about being right 100% of the time. It's about probability, and you would rather be right nine out of 10 times rather than be right one time, right? I mean, you only get 10% chance to be right by calling the top every single time, right? So yeah, so here is the support area, and ES will be looking to find support from here, and then extend higher again to new all-time high. All right, so that's the update here for ES, and as always, if you do want to get regular updates on ES or any other instrument, we do have 14 days free trial, so you can subscribe the trial at least to see how our service likes. I got another comment, saying that, well, we need to do a video update more often on specific instrument. Well, the chart of the day is chosen randomly and in rotational basis, right? If you do want to get regular updates, that's when you look at the member area and so on, because our member paid for the service. And somebody said that, well, um, if you don't do a follow-up video, then we don't know whether the service is good or not. Well, that's what the 14 days free trial is, right? We have 14 days free trial, and you can try out to check our service. All right, so that's what we have here, and I'll see you all again tomorrow, and have a nice day, everyone.